Oh, we're live.
Hey, we are live. Hello, welcome. My name is Drew Innes, the CEO of Haus, and I've got here a special guest. It's actually Sam Powell. He normally doesn't get in front of camera because he's our sort of nerdy chief analyst that's in the background crunching the numbers on property and the state of the property market.
Very, very nervous time for me.
What, front of camera? Look at you. Look at this handsome young rooster.
Oh, no. Thanks, mate. Too kind.
Too kind.
Just looking at my hairline, though. But anyway, here we go.
That's all right. Well, your hair's probably falling out, mate, because where the market's going.
No, it's not that bad.
Right. Okay, so today, what we thought we'd do is, like, we're always producing information here and innovating and so on and so forth. So today what we wanted to do was just talk about Sam's insights as an expert in regards to, where we're seeing the market. And obviously that's from the perspective of a company that is in the market day in, day out, buying properties for clients all over the country. Yeah?
Yep. Yeah. Well, from what I'm seeing, there's definitely a lot of fear in the market. So what we're seeing is definitely reduced numbers of people going to auction and open homes. And when we're negotiating as well, instead of negotiating against 4 or 6, it's more so maybe just the 2 or the 1.
Yep.
We even got an auction that we're going to tomorrow, which is looking pretty promising, but you can never count your chickens, right?
Exactly. Yeah. So let's sort of just talk about that for a moment, because I know we refer to the period that we're feeling that we're in at the moment as like a shoulder season.
Yep.
And so just for those that are tuning in that may not actually have ever heard property referred to in that way, just talk us through that. What do we mean by shoulder season?
Yeah, well, it was the term coined by the famous Scott Agate, and I'm on board with that 100%. So, like, it's the shoulder season. So last year, right, we saw record growth rates, 25.5% was the national average. So generally, property growth rates sit around that 6 to 7% from a nationwide basis. So you've got to sort of zoom out a little bit and go, well, yes, those that bought later in the peak towards end of 2021, early 2022, they're obviously in some bit of pain at the moment, given, well, it depends on where you purchase, right? So you zoom out. Like, I've been buying properties for a few years now for myself, and they've done quite well. But to go 25.5% and then have a slight drawback, at the moment this year we're looking at a national drawback around 6.5%. So over the 2-year basis, you're still net ahead by 5-10%. So you kind of look at it that way and go, well, actually the market is still pretty buoyant. You've also got to understand the fundamentals that drive property markets and the media fear that they run around it. There's always an agenda behind that. So to break that down a little bit further, obviously we're in an inflationary period.
Yep.
The government's agenda is to bring that down. Now, Phil Lowe, the governor of the RBA, came out saying it was unsurprising given the inflation rates. For me, and I talk about this in the newsletter, what did they think after pumping 40% more currency into circulation over the lockdown periods? What did they think was happening? The money has to go somewhere. It does filter through from generally like the lower socioeconomic and goes into the pockets of the big business, right? That's the marketing campaigns that they run to draw that emotion out of you to buy things that you don't need, essentially. So I'll start my rant on that one. But
mate, don't get on your soapbox.
My soapbox is you got to look at the big picture in life and look at what you want. Is buying the new outdoor setting or the new couch going to be worth it?
Here he goes.
But anyway, I might be a minimalist on that sense, but overall, the Australian economy, yes, it's seen a pullback. Sydney's definitely been hurting the most. CoreLogic data's been released. It's around 10% pullback from its peak, which was December 21. And then Melbourne and Brizzy. Adelaide's been doing really well. For all those that have property in Adelaide, you probably know that. I think their peak was July 2022, and it's pulled back maybe 0.6%. So don't get caught up in all the media campaigns. obviously there's that saying, if it bleeds, it leads, and fear does help, generate that emotion and stops people from acting. And what I'm seeing now in this shoulder season is we've got access to properties that should have been sold pre-market or even as soon as it hit the market, still sitting around for a little bit. We're coaching our clients into how to find these opportunities, and we need to act fast, because with this fear comes uncertainty, and that's what we really specialise in, is we help pull that together to give them that certainty to act with confidence. And I can tell you now, given the vacancy rates that we're seeing around Australia, which is sub 1%, 1% was where it was in October, now it's at 0.9%. That's record lows. Growth markets, they're running anything below 2.5% is a sign of strong rental growth. And then you've got to get into the psyche of what people are thinking. If they're renters and their rent's going up, then they can afford the potential mortgage payments, then they start thinking, well, maybe I go into being a buyer. And then that drives capital appreciation as well. So just one of the many things I look at, but it is definitely slower, and I see it coming up to Christmas. I feel like they will want to have that Christmas retail run, so we'll see what happens. But interest rate wise, I'd probably say expect another small increase in December, and then we get January off.
Yep, perfect. And so for us, obviously working with clients nationwide and being in the market day in, day out, I mean, we've been seeing some incredible buying opportunities. So let's can you sort of talk about that in the context of, people buying into all of the BS in the media and be frozen in fear and not actually having the certainty to pull the trigger because they either are uninformed or they've just bought into the hype of the media.
Yeah, well, we've got a couple of deals at the moment that
killer deals. Damn.
Scott and I, we sit here and go, well, we just need more money, mate. There's some really good opportunities out there, and it's really nice to actually see these opportunities come through and be able to help our clients make smart decisions. So you just got to still zoom back and say, well, where are the fundamentals? Give yourself that confidence. Go, well, what's going to happen in the future? I mean, no one's got a crystal ball, but we do need food and shelter. It's Maslow's hierarchy of needs. So houses are pretty safe.
Fire.
Fire. Well, Wi-Fi these days.
Yeah, exactly.
Yeah, but I mean, have that long-term viewpoint and stop stressing yourself out. I just think that people get too caught up and they're short-term focused. So deal-wise, I mean, there's been a few people that are hurting, and whilst we don't like to capitalise on that, that's not what we're here to do. We're here to try and buy a property at the best price for our clients. So you can feel out those pain points.
Yeah, but that's what we do, right? We're not out there exploiting people, but our goal is to make sure that our clients buy at the lowest possible price and on the best terms. And so when we're butting up against an expert selling agent, his goal is to optimize what he can sell the property for, so he gets paid the most amount of commission.
Exactly.
Yeah, and so obviously there's these, that's what we're coming up against every day. So we're going to fight tooth and nail, irrespective of what's happening in the vendor's situation.
Yep. That's just the way the world works, and even still. You don't get too caught up in it, but if people have to sell, they've got an agenda to go elsewhere. And the property market hasn't fallen through the roof. I mean, as I said, the stats around there, like Sydney's the worst pain point, and there's markets within markets in Sydney, so don't get caught up in that.
Yeah.
And the unit market was pretty heavily hit, and it generally always is. That's why we coach people to stay away from that medium to high density unit market.
Yep.
But yeah, the market hasn't pulled back and it hasn't been that distressed. I mean, I just got off the phone with an agent who does specialise in those distressed properties, and he was surprised to think that there's been nothing coming through here on the Gold Coast. So just be mindful of what you read, and then also look into those reports that are being quoted, because they generally only give you that small little snippet.
Yeah, awesome. So we actually do have a market update. So it's not just us, sort of rabbiting on this live video.
Yeah, download the report.
So what we'll be producing this every month. It'll be going out, and so this is the November edition. It's also our first edition, coming out of the Haus camp, and so this newsletter is really, really thorough, and it's produced from the perspective of experts that are in the market day in, day out. So we're not buying into the media narrative or anything like that. This is the no fluff, no hype, no bullshit. If you want to read a newsletter about property, this is the one that you want to actually be tuning into. All right, so down in the comments below, if you want to get your hands on this, just leave a comment and we'll reach out to you via DM and just make sure that you know where to download this link. Or you can become a subscriber on our website and it'll come out this month.
Yeah, one thing I will say is it is 8 pages, and that sounds long, but it's actually not that bad because there's probably about 4 or 5 pages where I actually break down some really key locations. That,
let's talk about that.
Okay, cool. That's a secret sauce, mate.
Okay. Well, let's sort of talk about a couple of key hotspots.
Yeah. Okay. Well, in the report, I break down 3 suburbs that I see good growth potential in different price brackets. So 500,000, $1 million, and under 2 million.
Awesome.
A lot of data and information out there is for investors that are probably below that sub $700,000 range. Obviously, we deal with clients from all different brackets, but there is that high net worth individual that has already got a pretty established portfolio, and they're looking to diversify into more of those higher ticket items that can provide that development upside as well. So it's really important to look at multiple markets, and it gets you better equipped for what to foresee in the future for those lower priced areas. So I'll probably just rattle off a few things. So the $500,000 range, look, I like this range because you can get established houses in good locations, and when you take into account the cost of building these days, what you're really buying is the land, because that's what appreciates, and the improvements depreciate over time. So if you can try and buy something where it's got an established improvement or a house on there, you can pick it up for basically just a little bit over land value. So you're setting yourself up really well, and the yields there for detached housing are quite strong, and that is going to help you as you grow your portfolio. It'll enable you to fully leverage that out as it grows and use that equity to go into another property, or even do renovation improvements to increase your yield. So 500 grand range.
Yeah, so so on the report here, you've actually broken down all the sort of key performance indicators for people to just at a glance understand it. Yep. So just, I don't know, let's give some insight into a couple of suburbs that you're pretty hot on.
Yeah, probably the first one on the list is Bundaberg. There's a suburb in there called Norville. I see some really good growth potential there. There's definitely an art to it. So with that Bundaberg region, there's a lot of key infrastructure projects going through, which I do think is going to really increase the capital value over time. It's also mixing in well with that tree change trend that we're seeing. There's the new Bundaberg Hospital that's going through, due for completion in 2027, I believe it was. But that's
2027, 1.2 billion of investment.
Yeah,
massive.
So that's a big spend, and I just see that over time, if you can buy something for a median house price sits around $400,000, and you're getting good strong yields out of it. The land sizes are quite good. The key is always just check your flood and check your fire maps, and also public housing is a good point to sort of hit home on. So what I mean by that is you don't want to buy a property that has high tenant turnover, because it can cause a headache.
Yep.
And focusing on those areas is really important. So that would be something to look into for those who enjoy that data side, but also download the report through us and have a feed through.
Okay, so we've got one area there. What else? Talk to us about something, I don't know, $1 million or more.
All right, $1 million. Now we're on the Gold.
Let's get serious.
We're on the Gold Coast here, and obviously I feel like we have a strong affinity with the Gold Coast, and I was been trawling through the data, and it's just popping out. There's a few locations on the Gold Coast that are showing really strong signs of growth in the sub-mil and also sub-2 mil. So Merrimack is a location. It's a suburb in the Gold Coast.
It's just 5 minutes that way.
Just 5 minutes that way, and it's not pushing the Gold Coast. I look nationwide from that end, but once you understand the geographical position of it is bound by the M1, so it's east side of that. You got to look at with the supply constraints that are in that area, that's going to help with housing growth, because more and more people, when they move to the Gold Coast, they're thinking, I want that coastal beach lifestyle, so they want to be more on that east side of the M1. I'm born and raised here, so I know it very well. Originally, Merrimack was seen as a less desirable location, put it that way, but for the median house price that you can get in there is right on the $1 million mark, and you can see some decent purchases coming through underneath that. If you look around the neighbouring suburbs, you can't buy houses for under $1 million. So it's just kind of like that ripple effect that I like to talk to about.
And also the rent yields are really strong around here. Damn.
Yeah, well, they're strong everywhere. As I said, 1%. It is a massive issue that people aren't really paying attention to in the government space, because housing is obviously important for people. They want to live and work somewhere, but I mean, even where I live in Robina, there's a guy just, he's struggling to actually find somewhere to rent, and they're just throwing money just because they have it, but there's just no houses for them. Yeah,
mate, I actually drove past and over for inspection, a rental over for inspection here in Merrimack yesterday, I think it was, or the day before, and there was an absolute cast of thousands out the front.
Yeah. I mean, it's good. It's good for investors and owners, because it's going to increase your values over time. But I do feel for them, because it's pretty stressful. Yeah,
absolutely. So as you said, not pushing the Gold Coast, but all the indicators are looking pretty good up here.
Yeah, and also like Maitland, East Maitland is looking really strong as well. That's down the Newcastle region. Once again, it's good infrastructure projects going through there. You've also got that restriction where it's geographically located, it's near the coastline, and Newcastle has been pumping the past few years, and it's sprawling out into Maitland, and I just like the East Maitland, and have a look at the report, see the metrics, and there's a few pretty key infrastructure projects going through there as well. But overall, I mean, you sort of look back and go, well, for me anyway, if you can work anywhere in the world or in Australia or online now, where would you rather be?
Yeah, well, me in the snow.
Yeah, true.
All depends what floats your boat, right?
Yeah, but I'd say don't get too caught up in. There's obviously that tree change and the sea change going through, but take into account what's it going to be like in 10 years. Like, you will see good short-term growth in a few of these good locations that the data's pointing you towards, but you're not investing. I personally don't invest for 2, 3, 4 years.
Yeah,
I'm looking at 6 year
window
plus.
Or something. Yeah.
10 years is generally what we say.
Yeah.
And there's different strategies around that as well.
Yeah, perfect. And so, just in terms of if you're tuning into this as an investor, and I don't know, you've done some training maybe, or you haven't, and you just sort of feel that you want to actually start building your wealth through property, but you don't know what that next step is, and you're feeling uncertain about where the market is, and you're not confident about what to do. We would argue, notwithstanding the fact that we've talked about it's a shoulder season, that there's some amazing opportunities out there right now. And it sort of, to many, it almost feels a little bit like counterintuitive to want to actually pull the trigger with interest rates rising and talk of, you know, property coming off the boil and all the rest of it. But actually, this is where you have to, you know, have the courage to actually like upskill yourself. You become more knowledgeable, surround yourself with the right type of advice, and get out there and actually pull the trigger and make it happen, because there's plenty of deals out there at the moment.
Yeah, there's a classic Warren Buffett quote that I'm not going to say because everyone bloody throws it to death, and Scotty hates it as well. But yeah, I mean, have confidence, but also just get in touch with us. Have a strategy session.
Yeah.
We might be able to ease those fears, but it's you got to ask yourself, if you do nothing, nothing will happen, right? So
yeah, and so one of the things, notwithstanding the fact that we are not buyers agents, where, you know, Australia's only negotiation as a service business, and so that's our core expertise, analysis and negotiation for clients. The reality is there are plenty of strategies and tools, and you can access these through our Buy Ready system. That will enable you from the comfort of your own home to actually sort of pinpoint some of these target areas. You could literally take this report, you could have a strategy session with one of our buyer coaches, you could tune into our knowledge that's been gained from being in the market day in, day out, and we could help you build that investment portfolio. There's absolutely no question whatsoever. We're actually doing it for clients at the moment, you know, and you know, so whether if you're time poor or you're just uncertain, you're not confident, we could handle all of that for you.
I've also broken down some things in that newsletter of, you know, what to look for with investment properties. Like, it's not just looking at locations. I mean, there's a lot of different data houses out there now. It's also looking at what are you buying, and, you know, is that going to be a headache for you?
Yeah.
And also what we do here, which kind of lights us up, is what can we do with it in the future, and how can we create that additional value that you don't just have to rely on just capital growth. You can look at, you know, multiple different avenues. So development potential and subdivisions and things like that.
The other thing too that happens as a byproduct of us actually, you know, working with clients and being in the market and doing the analysis and on their particular property, you know, we're all of a sudden starting to see other opportunities that may in fact be better. And so, you know, even if a client puts a target property in front of us, if we think that there's, you know, a better asset out there that's shown up through our research, you know, then we'd be putting that in front of them. We'd be saying, hey, well, that's good, but this is great.
Yeah, well, that's actually a really good point. When we are negotiating on properties, it's always good to have a couple of horses in the race.
Yeah.
One, it takes that emotion out, especially for investors, where you're looking at numbers focused, but also as a byproduct, we're negotiating really well on 2 or 3 different properties. We only have a client for one, and as a result, we obviously go with the one which the client is more happy with, but all 3 of them are really good opportunities, and we kind of just have to unfortunately let a few go. So, I mean, obviously where we can, we push that out to the community.
Yeah, well, absolutely. It's worth tuning in for those. So, mate, just in closing out the call, let's assume that you were adding another property to your portfolio tomorrow.
Good question.
Where would you be doing that? Where would we be on the hunt?
Well, strategy-wise, I've got to look at where my portfolio sits. I've got a couple in Queensland and one in Adelaide as well. I'd have to probably, from the data perspective, I do like parts of northern New South Wales, Tweed Heads region, depending on purchase price as well. And, you know,
there's some big projects going in there too, isn't there?
Yeah.
New hospital around back at Kingscliff and.
Yeah, well, Tweed Heads demographically hasn't been a strong performing market, but once again there are flood risks there, so be mindful of that. But for that purchase price that I'd be looking at, I'm diversifying out of Queensland and South Australia, and it's also close to home for me personally. So that's what I mean. Every single person has a different strategy because they have a different set of circumstances. With my connections on the Gold Coast and northern New South Wales, it enables me to manufacture equity in to anything that I buy, and that's what I try to find as well. So
perfect. And so when you talk about manufacturing equity in, you're meaning that if you buy down there, you've got a whole family of builders and the like that can sort of mobilise to make things happen.
Yeah, absolutely. It'd be investment based, so it'd be pretty simple renovation, but just having access to those trades, which is difficult in this market. But that's just sort of, for me, that's where my strategy would go. And obviously you've got to factor in the rising cost of building work at the moment and so on. And lag times as well. And, but there's an opportunity there, and it's more so just those who have the ability to do it. But a lot of people also don't know their ability. I'd say just get in touch with your mortgage broker or reach out to us to put you in contact with some of the best mortgage brokers in Australia that we work with, just to see your position, and it's just always worth that question.
Perfect. Okay, cool. All right, well look mate, thanks for getting in front of the camera. It's been a bit of a treat.
It wasn't that bad.
It's not that scary.
I'm not a fan of looking at myself too much, but the little green dot's good.
Exactly. So if you want to get a copy of this newsletter and get obviously on our subscriber list so you get them every month moving forward, just pop a comment down below that you'd like the newsletter. We'll get you the link where you can go and download this, and or go to the website and you can submit an inquiry or subscribe there, and we'll get you on our newsletter list and we'll get that out to you. Awesome.
Thanks for letting me talk.
He's normally crunching numbers behind the desk.
Oh, jeez.
Well done.
Thanks.